Hey, happy Thursday, everyone. Futures Brizio here, 12/17 on Thursday, March 5th. Hope everybody's doing well. And before we get started, as always, smash that like button, subscribe to the channel. Any questions, comments, leave them down below. And we're going to just jump right in here, do a little update in futures, talk a little bit more about volume profile, et cetera, et cetera. So let's get going here and appreciate you watching. Um, so, couple of last videos that I made on volume profile, I was using what they call a fixed range volume profile. So in TradingView, I have that favorite. It's right here, fixed range volume profile. Not going to rehash all that. I made one or two videos about it. The issue that I had, okay, so the good thing about the fixed range volume profile is that you can draw it to the exact areas you want. Okay, so even if it's back in time. So if I wanted to draw a fixed range from like this high to this low, I could do that and it would draw it. Um, the issue that I was having with it, and I don't know if it's a setting thing, I couldn't figure out any way to not have it do that. What was happening was if I drew it on this chart, like just for instance, this is the Swiss franc currency index. If I drew it on this chart, it would show up on every single chart. Okay, whether I wanted it there or not. Now, if I did want it on the yellow chart, that's fine. But of course, it would be in the wrong place on the yellow chart because every chart looks different, right? You know, the swing highs and lows and where you would draw it from are completely different. So it was acting like, say, the stochastic oscillator. Like if I put this RSI stochastic on my chart, it's going to show up on every chart. But at least with this indicator, it adapts to the market that it's showing on, right? So because obviously how this indicator shows on this chart is on this market, it's going to be different than putting it on a rice chart, for instance. And so it's not so much that because it was drawing on another chart, that was annoying on every chart. That's annoying enough. But of course, like I said, it doesn't display right on the yellow chart. So I was having to either constantly redraw it, move the anchor points to where I really wanted it, or delete it and then reapply it, or just delete it. But if I delete it, it deletes it off every chart. So that's the other problem. So if I put it on this chart and put it where I wanted it, right, that's fine. But then I went to the other chart and I said, well, I don't really want it here, or I don't want it at all. So I right click and I delete it. Well, now it's going to delete it off the chart I do want it on. So I'm not meaning to complain. No one, I know no one from TradingView is watching this. Um, but if anybody knows how to change that, if there's a way to change it, let me know. I would love to hear it because I looked in certainly that's not in the setting of the indicator, and I couldn't even find it in TradingView settings either to have any indicator that you add, or to only show on the one chart that you're putting it on. Okay, I mean, if I draw I got this rectangle here on this chart. This is they consider this they consider the volume profile a drawing, and obviously they consider this rectangle a drawing. So if it should act the same thing, right? If I put this rectangle on this chart, it doesn't show up on every chart. It only shows up on this chart where I put it. If I want to show a rectangle on soybeans, I got to go to soybeans and draw the rectangle on there, right? So you get what I'm saying. A little bit frustrating, but the fixed range volume profile is great, but I do have that issue with it. So I did kind of find another drawing tool they have, which the downside to it is that you can't anchor it on past price action. So again, if I wanted to I could use a fixed range and draw it from this high here to this low here, which of course is past history, if I wanted to do that. Okay. You can't do that with this second one that I'm using now, but that's okay because to be honest, old price action in terms of volume profile is probably not valid anyways, right? I want to look at what's going on now. So that is a little bit of an issue, but it's a minor one in my book. So, of course, what I'm referring to here is the anchored volume profile, which I have favorited. It's right here. And again, if you go into indicators and you just search anchored volume profile, you're going to get it over here. And it's also over here under forecasting and measurement tools. It's right here. I'm going to move myself out of the way. It's right here, anchored volume profile. I said I put it in my favorites, so it shows up on my little favorites bar right here. Now, the nice thing about this, it's easier to apply. All you have to do is click where you want it to start from, and then it automatically calculates it right up to the current price. Okay. So for instance, this one, and I have two on this chart. I'll get into that in a second. For this one, I started it from this high over here. No, this high, excuse me. I clicked it right here. And of course, so now it's calculating it from this high to where price is right now, which is right here. So that's this whole index right here. Now I put a second one on the chart, and you can put as many on the chart as you want. I put a second one, which I don't always have to do, but when price appears to be going, through some new trending stages, I like to have one a little bit zoomed in because it helps you with entry. So this one is going from this current high, this last swing high, to here. Now this right here might become a new current swing. If this goes down and makes a new low, I'll remove this one and draw a new one from here to wherever price ends up, if that happens. Okay. So that's the nice thing about it, is it's one click. Basically, you click where you want it to start from, then it automatically draws it. Other than that, the settings on this is pretty much the same. I only have the input set to total. So instead of showing these bars as like red and green, like up, volume, down, which they call up, down, if I click this, you can see it changes this to up, down. So these are basically, down volume. This is up volume at these prices. Okay. So I just use total. I don't really need to see up, down. And again, that's completely customizable. I also changed the row size to 100. Not really critical. I just like to see the detail. You can change this to whatever you want. You can make it 10, and you're going to have giant blocks. Like if I change this to 10, you'll see. I mean, to me, that's not really helpful. You just makes it these giant blocks. So I think, maybe 10 is not enough, but 100 is a lot, but whatever. So I just like the details. So I leave it at 100. And then the value area volume, which again is to me a little bit of a mislabel by TradingView. It should say value area percent, not volume, but whatever. It's a minor detail. Let me change that back to 100. Okay, then if I go back in, so this just shows the value. So I have it set to 100%, which means it shows the entire profile lit up like this, where, all the whole profile is bright. Now, as I've mentioned before, 70% is usually what most traders consider the value area. Meaning if you set this to 70, and I'll do that just to show you. Oops, not 40, 70. And again, you look over here, you can see you have some of the profile now is looking, kind of dimmed out right here. So that means this last bright line right here, where my crosshair is, that's the value area high. And then this last bright line down here is the value area low. So this is the value area, which just means that 70% of all the volume within this profile is traded in this bright area. And then anything outside of here is considered outside the value area. So this is the value area high, this value area low, and all these are considered to be outside of value. I don't, I, th- and again, this is completely, volume profile has a million different ways to use it. And some people, say, hey, well, if it trades outside of value, then I'm going to look for price to snap back inside of it. I mean, if the market's trending, it's going to go outside of value and it's going to keep going. I mean, here's a perfect example right now on this setup. So here's the value area based on my profile. It's back here, right? And you can see price already went well outside of it and looks like it wants to try to make another run down. So am I thinking that price is now going to turn around and go back into value? I mean, it might, but I don't see any reason for it to. Because even when it broke out here, it didn't even retrace back. It just kept going. It tried to come back up right here, but it didn't. So the bottom line is, for me, I just leave it at 100. I don't, care so much about the value areas. I mean, I can clearly see where there's lower volume at, different nodes here, and obviously always at the extreme areas, at the very, very edges of these profiles, there's going to be low volume. Okay. Because it's outside of the area that you've drawn. Right. So to me, it doesn't matter. Okay. So those are some of my custom settings. I leave it on total. I change the row size to 100, just gives more detail. And I leave the volume, value area volume at 100. The other things I did is I like the developing the POC. I just changed the color because it was black, so obviously I couldn't see it on a black background. And then I also like the developing POC, so I turned that on and gave that. I should probably give that a different color, but it doesn't matter. That's this right here. And again, what the developing POC does is just shows you for that profile where the POC has developed and moved, and it tells you not only where it moved from, but when it moved. Okay. So on this particular profile right here, you can see that the this uh, this POC has moved from here down to here, and so it hit this new area yesterday around the close of the market around 2 o'clock yesterday, and that's what this little thin line represents. Now, again, I have two profiles on here, so um, I have two developing POCs, so I probably should turn one of them a different color, only because if they do overlap, if they don't overlap, I want to see different colors. Let me just change one to green, just to pick a color. Okay, so there's that one. So this is the and let me change the POC on this one to just so we're monitoring and just for the sake of this video anyway. So we'll change them both to green. Okay, so now I know that this, well, actually, that's probably not a good color because it's like the same color as the profile. Let's pick a different color. Developing POC. Okay. So whatever. So you can see that this particular profile, this is the POC and this is the developing POC for it. Okay. So on this profile, the developing POC, the POC is currently sitting right here, and it shows you where it came from. It reached this area back on February 23rd, and it's been sitting here. This white one is this shorter term profile over here. Okay. And again, that one repainted over here. And then this is the current POC where it sits. Okay. And this just tells you where it came from. You don't need the developing POC, but I like it, especially when the market's trending, because again, it just, to me, it helps me confirm the trending market as the POC drops down, because obviously you don't have a photographic memory to know like where it came from. Like, and I want to know not only did it move, but when it moved. All right. So that's why I use it. Okay. But you don't necessarily need to, but it's a real thin line. It's like, who cares? It doesn't really take up a lot of space on the chart. Okay. And then of course you can pick whatever colors you want outside of that. And of course, if you ever want to just hide it temporarily, you can just click this button, it'll go away. All right. And you turn it back on. It's still there. Um, Sometimes I like to do that and just look at the POC, and I don't even necessarily want to look at the volume bars at the moment. I just want to see where the POCs are. To me, that is the most important part of the profile. Some people will tell you it's the value area or outside the value areas, but again, in my opinion, the POC is the most important part. But I do still like to see the volume, especially when price is on the move, to see where those high and low volume nodes are. Um, because again, as a general rule, low volume nodes price tends to blow right through it because there's no very little volume at that level, and so it's just price when it hits one of those low volume nodes is going to tend to go right through it. If you look like here, way over on the left, you can see low volume, and if you look at where price was, okay, had this low volume node, it like price blew right through it. Okay. Right over here, it's a thin one. This is a 4-hour chart. You can see this little thin area of low volume, and we have this big bearish candle blow right through it. And when price runs into high volume nodes, it tends to get caught up a little bit because there's more trading, buying and selling, and kind of equilibrium at some of those high volume nodes. That's why the POC causes so much consolidation like this, because this is where the highest trading volume is. So that's the only reason why I like to look at the volume, is just to see the nodes and where I think price might just slice right through and where it might get hung up. Um, so let me get to the real purpose of this. Is just to talk about a couple of setups. So again, on this particular profile, this one is looking from the start of this most recent major leg down. So kind of like the 4-hour profile. Of course, I drew this one on the 4-hour too, but So you've got this one right here going from this high to current price. I mean, so I started here, and again, it calculates it through current. That's this profile. This one you can see is a little smaller because this one I drew from this high to this low right here, because this represents on kind of a zoomed in level the most recent swing. And you can see the POC on the larger profile is still sitting up here, which is fine, but you can see price move down, and the lower profile POC, the smaller one, has shown price now right in this area. And of course, you can see the consolidation going on in here around this profile. As soon as it came down here, price started, trading right around it, up, down, up, down. Again, very common around the POC, where price just kind of going, knifing up and through it and setting up little ranges. Okay. And of course, this one has set up a little range right here. Okay. So you can hear that alert going off my chart. That's actually this chart, which is why I started here, this the Swiss franc currency index. And you can see when the smaller time frame or the smaller look profile POC drops down after a move down, this is showing you that large players are now setting up shop at this next level and, setting up for their next move down. Okay. And so eventually what'll happen, if this thing really starts to sell, eventually you'll see the larger time frame POC, which is this one, the one that I took this whole leg off of from way up here. This will eventually also start moving down. But right now, again, you're looking at this entire area. So that is this area right here, this green POC, is still the largest volume within this whole area. But from the most recent swing high from here to here, now it's only looking at this. This is where the highest volume is sitting right now, which makes total sense, right? Price moved away, slices through, makes a new low, retraces, chops around, the POC drops down here, and it's kind of like reloading the gun, right? It's reloading and ready to, like, pop, hopefully, if you're short, to another new low down. And then eventually, if that happens, let's say price, comes down here, sets up a new low down here, right? Then you'll see this POC, this white POC, the developing POC will change, and you'll probably see the POC come and set up around, not at that low, but during the pullback. So let's say price comes down to here, and then it pulls back like to here. You'll see this POC drop into like this area right here, okay? Indicating that they're reloading again. Now, I said on a past video that if the POC gets down, like in a downtrend, comes down to like near current price, then that potentially could be that trend is running out of steam. It becomes more of a neutral profile. And that is the case if the POC comes down like right at the edges. So if the POC came down to the lows and then we start seeing consolidation at the lows, all right, and it just starts moving sideways right at the extreme lows, not at the pullback area, but like at near the lows, that's to me is more of a warning sign of potential by short covering by the large big money players and potential accumulation. But if the market pulls back and the POC sets up a little bit higher at the top of the consolidation area or the pullback area, that is a continuation signal. Again, meaning they're kind of reloading for the next wave down. So that's kind of like what we see right here. And you can see price is trying to come out of this area right now. And this actually is a sell right now. I would like to see it close maybe below these little lows right here. I want to extend this box to pick up these lows on this consolidation. You can see it's struggling a little bit, but theoretically this is a short position because this is an engulfing bearish candle, whereas all these other ones, had these big wicks and snap back. They all kind of covered this area down and then back. Now it looks like maybe it's loading up and ready to go. So, obviously trading is subjective. And also looking at the stochastic RSI actually gave a sell signal back here, which was a little bit early because you can see price went back up again. And depending where your stop loss was, you may have been knocked out of that. If you had it sitting right at the high of this rectangle, this wick right here would have taken you out, which would have been a bummer. But the stochastic RSI is seeing that resumption of the downtrend too. So this candle's not going to close. This is the noon candle. It's not going to close till 4 o'clock because this is a 4-hour chart. So, you could go to, say, a 1-hour chart. And if I can get a 1 hour close, I wouldn't go any shorter than a 1 hour, but if I can get a 1 hour close, in fact, I'm going to move my alert. That's because my alert was going off. Move my alert to right there. If I get a candle close down here, I'd probably think about a short right here. So, but again, you got to do what you feel is, best. But that's the anchored volume profile and how I've been experiment with it. Now, some of these markets have like basically hockey stick straight up trends. I think like maybe like soybeans. So yeah, let's look at soybean. Again, these are all 4-hour charts. If you look at soybean, you know, I mean, this one's been flattening out a little bit, but essentially we've been just kind of going straight up, right? So I drew this profile from this breakout candle down here. Actually, no, I drew it from the very, very bottom of the move, which was here. But even if I redrew it to here, I don't think it would make any difference. The POC on the 4-hour chart is sitting back here. And once again, you can see the consolidation around the POC right here, right? Up through it, back below, through it, back below, through it, little false breakout here, back below, through it, back below, and then boom, finally breakout. And then, once it breaks above the range, you see these big engulfing candle. To me, that's the entry. Okay. So now this one's a little tougher because you only really have one profile, but I still would like to see. So if I was going to draw another one, what I would do is just find a pullback somewhere in this area here in this up move. Let me see if I can find one. Maybe that's a little better. Uh, Not really that one. How about, oh, okay. How about we use soybean oil? This is actually better. And I didn't take this trade. I should have. But I was watching all these currency indexes this morning because I had an alert set right here. It blew right through it when it broke out of this. You want to just talk about old fashioned um, technical analysis. I just had a little trend line drawn right here on this pullback. I had an alert set above it. And then, actually during the overnight session yesterday, we broke out of that. And then we did make a new high today around market open. Now we're just, of course, we're starting to consolidate because the market closes in less than 2 hours. So I'm just going to take this alert off of here now anyways. But for the sake of this video, so again, I drew this profile from way back at the start of this up move, way back here. You can see the bottom of the profile lines up with these lows. And you can see the development of the POC up here, right? The market reloads, and then we have this little false breakdown under the POC, and then boom, it goes up. Okay. But this is telling you the market's bullish, right? Because we had this big strong rally here, POC readjust, they reload up here. Okay. Again, consolidation area, little false breakout, right? Liquidity sweep. People thinking the market's going to go back down right here. So they suck people in right here, and then boom, price goes up. Now, what if I wanted to draw another profile to give me some more fine-tuned entry? So let's put another one on here, and we'll start it from this point. Okay, so now, and I'm going to put this over to the other side of the chart because it's overlapping. So I'm going to flip this to left. Okay, so now this profile is the one I just drew. It starts right here and goes to current price. You can see the POC on this one is sitting right here, and you can see the evolution of that POC as the trend has gone up. The POC has followed. Every time the market pulls back, the POC reloads at that area right here. Little hard to see because it's such a strong trend. On a shorter time frame, you would see it better. So if we go, maybe we'll go to a 1 hour chart or a 2 hour chart. Let's go to a 2 hour chart. Okay, you can see it reloading at all these pullback areas right here, right? Goes flat for a while, right? Doesn't move for right here, doesn't move for, let's see, June 19th through February 19th to the 20th. So for a week, it moved flat. And indeed, price didn't really go very far in that week. It just it did go up a little bit, but not really aggressively. And then boom, it relocates. The market pulls back right at this where this bearish candle is, sweeps liquidity, and then boom, it shoots up again. Okay. So that's telling you, that's the footprint of big money telling you that, hey, there is something going on here. And, the big players are winding up. It kind of gives you a little insight of them setting up. Right in here, they weren't really interested. They were just accumulating very quietly in here, right? False breakout to the downside. Otherwise, just accumulating, accumulating. Remember, the POC at that point was sitting right here, just kind of chopping around it. I mean, you could have taken a long anywhere in here, this candle, that's fine. You could have taken a long right in here and that would have worked out. But if you're waiting for the POC to tell you when, then this was the area right in here. Price pulled back. This actually is the ideal entry based on the POC right on this candle. You get this fake breakout to the downside. All right, comes right back into the range here, and then it shoots up. Okay, so that's how you can use that. Now, let's say we wanted to tighten it up even further. So now let's go to this. Where did I just draw that from? It was from here. Let's draw another one. Okay, so now we go to this swing low right here, anywhere in here. Boom, where does it draw it? Right where price just broke out of today. Okay, and again, we're on a 1 hour chart. You can see price, the POC relocated here first. We had a gap up. All right, this was probably Sunday with this weird looking candle. Yeah, this was Sunday when the market opened. You can just tell these weird looking Sunday candles and the gap. But either way, it was a gap up. And then price traded down. We had a neutral POC, was sitting flat here. Okay, so this whole move down right here, you would have done nothing because the POC was telling you they're not ready to go yet. And then on yesterday, the POC relocates to this area right here. And then what do we get today? The breakout. Okay. All right. So that's what I'm talking about. Okay. You can just follow the POC up during a trend or down in a downtrend. You can have one profile kind of highlighting the anchor point, the starting point. Okay. And I mean, some people say, well, you don't even need this big one. I still like to have it anyways because I want to know when this one starts to move. Because eventually what will happen is this uptrend eventually will start to burn out, right? At some point. I don't know when, doesn't matter. At some point, it's going to start to burn out. And you're going to see the big money, start to find a major distribution point where they're starting to liquidate their longs, selling off their positions. And you're going to see a big volume spike. The longer term POC, this is the 4 hour that I drew on the 4 hour chart, this will jump up and probably start lining up with the highs, okay, and maybe line up with the shorter POC near the highs. To me, that would be a sign that the market's starting to get a little tired. That hasn't happened yet, okay? They're still fine with this down here. There's still, a lot of volume that was being traded down here, and that's fine. So this is just kind of like the 30,000 foot view. And this shorter one I'm drawing, this is the one I basically redraw after every move, becomes the next area that I'm hunting for an entry. Okay, so now with that being said, we've got new highs. So in real time, let's draw this. And we're going to start it from this low, which is the end of this breakout. And now you can see the POC has now moved up to here as of 10 o'clock this morning, because of course this was the major breakout, but this actually happened. This breakout actually started yesterday, but this big candle, you can see it, they loaded up here. Let's go to a shorter time frame. Go to a 30-minute, and right there at the 30-minute time frame, so this was right at the market open, the POC jumped. So if you were watching this morning, market opens 9:30, boom, POC jumps. They're telling you, they're screaming in your face that we're buying. And then sure enough, for the next, 2-3 hours, price goes up. So, you could have gotten in right on this candle. As soon as the POC adapted and jumped, that's why I like the developing POC, so I can see those moves, not only where it came from, but when it precisely moved. And, you could have gone long right here, this candle, this one, whatever. Put your stop just below the range, which is like right here, nice tight stop. And that's a nice trade for the day, right? So this is kind of ideal trend following using this anchored volume profile. Now, some people are going to say, well, you can use a session profile. I don't like the session profile. Again, it draws too many on the chart. And I just don't like it. I find just having these two on either side of the chart is perfectly fine with me. I don't care what happened in the past. The session one's going to draw all the past sessions. I know where the volume was just by looking at the developing POC. I know where it came from and what it's doing. And all I'm doing is looking for the next entry point if I if I'm looking for an entry into this long, which I didn't take, but now that we've got this POC, I'll wait. Price probably will eventually consolidate around these highs, and we'll chop around, and then we'll see if it makes another move up, around market open sometime or news, and then that'll be your next entry to get in. Okay. So I don't want to beat a dead horse. It's the same process. I just showed it to you on two different charts. Here's a downtrend on this market. Now, there's going to be some markets. I don't know if it's the Canadian dollar. Boy, this is a really nice entry right here. So let's talk about this Canadian dollar. Made this low right here. Okay, there's the POC, and you can see the consolidation and now this breakout down. Okay, so you guys want to see live trades. I'm actually going to take this one live. All right, I'm going to put a stop above the candle, 73. Let's call it 73.40. Close enough right now. All right, just going to take one contract. A little late in the day here. It's still an $820 risk. No, it's not going to let me do that. I've got a, no, not sure why. Oh, okay. Yeah, it's because of because I've got other open positions open. That's fine. I've got enough risk on the table with the CAD, but you get the point. All right. There was one that was like really trading in like a weird range. And don't remember what market it was. Maybe it was the yen. No, it's not the yen. You can see I'm in a yen short here. Again, let's look at this one. So here's the 4-hour profile drawing from here to here. I'm on the 4-hour chart. And then if we look at this one from the end of this move to here, okay, we can see, no, actually, no, that's not right. We want to draw it from, I confused myself, from the breakout from the last swing low. So that was from here. So we draw it here. There's the POC redrawing itself down here. It kind of settles in. All right, settles in at the bottom, and then it starts to move back up a little bit. It settles in right here. Price goes up. Obviously, these are very weak bounces. Settles in right here, and now price is broke below. Okay, and this probably will break these lows. Obviously, we're seeing some resistance around or some support around these lows. This still looks pretty bearish, like it wants to run up for another go. Always keep your higher time frame in mind. We do have a major bottom sitting down here, but it's still pretty far from where price is now. This is the 9-hour chart, but this does look like it will make another impulsive move down and probably get down conservatively to at least the bodies of these candles past here. So that's what I'm betting on. In fact, let me just throw my let me throw a little TP on here. I'll be happy with that. We're going to put a buy limit right there, and we'll just let that thing go. Okay. And that's about, looks like maybe a 1.5 to 1 risk to reward ratio. Not great, but I'll take it. It's still a pretty good move. Okay. So, we can look at other markets. Here's corn. Corn, of course, has this huge gap. So I'm not trading this one right now because it's a little weird here with the with this gap. And you can see no volume here. Market open, like I told you. Remember I said price will slice right through low volume areas. Well, of course, this was Sunday open. There was no liquidity and the prices gapped higher. And you can see that gap right here in the volume. There was no volume here. So it knifed right through it. Came back, didn't fill the gap, but it came back to the top edge of the gap, and then it rallied again. Okay. So now if this goes up and makes a new high, then what I will do, I'm not going to draw it yet because, well, I could. You could draw it from, let's assume this is going to go make a new high. Then we're going to draw another profile from this low to here to, wherever price settles. Now this profile is going to keep developing as it goes up. Right now the POC is sitting here because the breakout just happened. But what will probably happen if we follow the other charts is this goes up, makes a new high, and then starts to consolidate. This POC will move up to that area and it'll flatline for a while, maybe even below. And then eventually price will break out of that area. The POC may actually move up a little bit, and then that'll be your sign that it's ready to go again. Okay. So I'm not in this. I want this market to pull away from this gap area and kind of settle down. If it's going to start trending up, great. It's just starting because it was in this consolidation for so long. We'll see what happens. So that's corn. That's an example of one where I would just kind of sit and wait, just because of this extreme volatility that we saw in here. All right. So that's basically the process. And again, I thought there was a market that was kind of like really whipsawy. Uh, no, it's not the Australian dollar. Well, whatever. Um, but I guess we'll look at this while we're on here. Okay, 4 hour chart. So I've got a profile that I originally drew from way back here at this where this big uptrend started. This probably needs to be adjusted now. All right. So actually, let's take this one off. All right. And now now we've got this smaller one that runs from, looks like I drew it from here to here. Okay. So let's take that one off too. Let's kind of start this one fresh. I've had these on here a few days now. All right. And we'll just delete this one. Delete this one. So now let's put one, we're on the 4 hour. We'll draw one from here to here. All right. So that's this from this leg to where price is now. And then we'll draw a shorter one. Now, this might not be much different. Well, it'll be a little different, but let's see where this one draws. Now, here's the POC on this one, and we need to flip that one to the other side. Okay, so this one kind of hones in on the current price action. So we've got this one where this down leg started. We're still sitting up here. This one will probably sit here for a while. All right, and it'll continue to develop down the left side of the chart because this is the recent swing. This is kind of the longer term one. We'll sit up here for a while. Here's the shorter term one. Again, it relocated. You can see where this one started right here, and then price dropped down. This was like 6 o'clock this morning. All right, if we go to a 1 hour chart, we'll zoom in a little bit on this. You can see right here during the kind of London session, right into the beginning of the New York session, we had the POC here. And then right here, New York session, this was at 10 o'clock. You can see it dropped down and then boom, we had this big move down. Now, of course, you could have gotten in anywhere in here, would have been perfectly fine as long as your stoppers were. So if you're a New York market trader, you could have entered right on this candle, put your stop above the consolidation area, which is right here or maybe up here. And then this thing would be in a nice profit right now. Okay. So now that this thing, I'm going to delete this. This was an alert I put on a higher time frame. I don't want that anymore. So now going back to the 4 hour, I eventually, if this goes down, make a new low, then I'll redraw the shorter term profile to pick up, actually, we're already counting this leg down. So this one's fine. I'll leave this one. If it gets to a new low, then we'll see what happens with the POC. We'll probably move down, and then we'll just get ready for, another leg down at some point. Okay. And we also had a signal I note on the stochastic RSI here on the 4 hour too. So if you want an extra confluence, which is always good, the stochastic RSI is a really good indicator. That's why, even though I don't look at it a lot, I like having it on the chart because if I am ready to pull the trigger, if I have this, confirmation, it's great. I don't need it because sometimes, depending on the market, this thing can be a little slow. But for most, really high liquidity markets, this is a really good indicator with a nice balance of lag and giving you timely signals, but not being so aggressive that it's giving you a lot of false signals. Okay. And I've talked about stochastic RSI before. All right. So, yeah, so that's basically trading with the anchored volume profile. And again, I'm using anywhere from like the 4 hour to the daily as my longer profile, depending on the trend. If it's a really long, elongated trend, I may put a profile from the origin of that trend. From the higher time frame, or I may go to a 4 hour and find a more obvious recent swing and start it there. But that's more of the longer look, okay? And then I'll draw one from the current, in this case, current swing high, because we're in a downtrend from the current swing high to, and obviously it's going to address where price is right now, okay? So right now I've got this one drawn because I'm assuming this is the smaller one that remember I just anchored it from here. I'm going to assume this is going to make a new low. This will become a kind of our shorter one. Okay. And then we'll leave this one up here that kind of represents the beginning of this move down on the higher time frame. All right, started up here, right? This is kind of the origin. Again, this POC will probably sit here for a while because it's looking at a larger view of data, but eventually this will start to also move down too. What you could very well see if this ends up being a longer term downtrend, obviously we'll see this short term one will move down somewhere. We may have to redraw it, but then you'll also start to see this one move down as well. Okay. If you're drawing it on a higher time frame, it's always going to be sitting a little bit higher because you're looking at more past data to draw it. Okay. So it's probably always going to be somewhere above it like this to some degree. But at some point, like I said, when the trend gets old and tired, these POCs will begin to almost maybe not completely overlap, but down at some future low, they'll start to kind of consolidate together, meaning that the big traders are kind of coming in saying, you know what, we're done with this downtrend. We're going to start buying back our positions, um, you know, buying them back from retail sellers who are trying to sell at the lows. And, we'll get some kind of consolidation and accumulation. Then eventually price will go back the other way. So, that's kind of the theory behind using two profiles. But if you don't want to use two, then I would recommend using the shorter term one in a trending market. So at least you have one drawn representing from the most recent swing, okay, to current price. Okay. The most recent swing to current price. Okay. Um, but hopefully that most recent swing led to, in this case, a new low. So it would be from here to here. But you also could draw one now from this swing because this looks pretty aggressive. More than likely, it's going to go down and probably make a new low at some point. Probably won't be today, but at some point over, maybe tomorrow, we'll eventually pop a little lower here and, make a new low. Okay. And then this will be your anchor point. And, you can't change these once they're on your chart because they're anchored, but that's fine. It's 2 clicks to delete it or 1 click to delete it. No, 2 clicks. You click the profile and then delete, or you right click on it and hit remove, and then it's gone. All right. And then you just draw a new one. So if you ever get confused, it's looking a little, messy, just delete them and start over again. Start with a clean chart so you can see everything and then just put them where they make sense. Okay. And again, I like to short-term swing trade. So again, I'm analyzing on say like the 4 hour, between the 4 hour and the daily again for my longer term view. And then, between like say the 1 hour and the 4 hour for my shorter profile. And I'll go to a short time frame like the 1 hour to, especially around market open, to look for those sudden moves in the POC that you may not see or be hard to see on the 4 hour. And kind of look for those telltale signals of a reload. And because usually once, as soon as that thing moves, get ready because that move's about to come. And you can see that in those charts I showed you where the POC relocated and then like within one candle, like within an hour or two, the price moved. Sometimes immediately, as soon as the POC moved, the price went. But certainly within like an hour or so after that, the price went. So you can go to the shorter time frame to fine tune, but you don't need to spend a lot of time down there. And then you just you can use the longer term profile. You can add a third profile, to show you old past history to maybe find high and low volume nodes. Like if I wanted to put one on here to show like from way back here, let's say, all right. If you look at this right now this is pretty interesting. Look at this longer term. So I just tagged this one from these lows down here. I could have gone even lower. I could have started here, but let's just take from this anchor point. This is where the high and low volume nodes can help you. You can see, the volume here starts to really thin. It gets lower and lower and lower. And then we have this huge drop of volume. If price gets down into this area, it's probably going to knife right through here. Okay. And you look way down here, you see this node sitting right here. Of course, these are back at the lows. That's a very obvious technical level. But either way, we'll probably expect some support on this move down, maybe somewhere around here. Okay, this is a good node. So if you're looking for like a management or a take profit area, this is where the longer term profile can help you if you wanted to add another one. Now, I'm not, if I was in this trade, I wouldn't be looking for a take profit right now. So I probably would just delete this. But if the market's been going along, you're in a trade that's been really profitable and it's moving, and you're wondering like how far is it going to go? You can zoom out to the higher time frame, find the old major swing highs and lows, draw another one like I just did from this low. So it's calculating from this low to current price. And you see all this low volume node. Say you can be pretty confident if price gets anywhere down here, it's going to make it through here pretty easily. There's no real big nodes in here. You got a couple little tiny, these are not really major. And then the first major one you see is really here around the 67.40 area. And then this is the one for sure I would look to, probably close my position if it gets to this point. All right, because you got a major node here. And then especially if you see the POCs on your shorter ones start to drop and kind of start lining up with these old areas, that's a definite sign that the market's running out of steam. Okay. So that's why I like to, draw some of the ones that cover more past history than others, because you're looking for those confluences with your POCs. But you don't need to worry about this until price is well in your favor and you're just looking for an off ramp. This is your off ramp, right? Around where these nodes, and these nodes will change as price starts to get down, like especially like down to here. You'll see these bars start to grow because now, price is down here. There's a lot more volume. People are exiting, people are entering, whatever. And these volume bars will grow. And eventually, like I said, the POCs will relocate down to here. And, uh, again, if they start happening at the lows, the POCs start dropping into the areas right where the lows formed. That's kind of a warning sign, especially if more than one lines up into those areas. That's kind of a warning sign that, hey, you're getting to a point where you need to think about getting out. So, anyway, so I'm going to leave it there, guys. I know I covered a lot. I didn't go through every market, but I wanted to talk more about the anchored volume profile than actually do market review. I am holding a few trades today, and so that's fine. I'm not going to talk about anything in Forex. I don't use this in Forex. Like I said, I only use a currency strength indicator in Forex. Again, this is what I use in Forex. Is this currency strength, which actually this is a really good trade right here on the pound Kiwi. Of course, this is the 4-hour chart. I like to use a little bit longer time frame. And what I'm looking for is crossovers. And on the 4-hour, let's go back to the 4-hour. This is a really good signal. This line right here represents the New Zealand dollar, the second currency in the pair. You can see crossing down, pound crossing up right here. And you can see this rally coming off this with the British pound. So this was actually a great long right here. It's still going, but if I go to like a 10 or 12-hour chart, which is my preferred time frame for these entries, it's going to get me a little bit later entry, but it does still do it. And you can still see the same crossover. It's just not as in your face, but you can see it right there. It happened on this candle, this current candle. This is an old alert here. I'm going to take off when I was trading it to the downside. And, this is a nice signal. That's all I do with Forex. I'm not using volume profile on here at all. This is a currency strength indicator. I actually had somebody build for me. It's very, very simple. I have it based on a 21-day look back. I can set this to whatever I want. But I have it set on 21. I have it set on live data, which means these lines, the most current view of it represents current price action. Or if I untick this, it doesn't update until the candle closes. So I leave it on live data if I'm looking for an entry. Doesn't really matter. But if I untick it, like I said, the indicator won't update until that time frame candle closes. Okay. And that's it. It's a 21 period look back. So this would be 21 10-hour candles, up to 1,000 candles, which is more than enough. All right. And that's all I do. I just look for major crossovers using this indicator on a higher time frame with a higher look back setting. And sometimes it might get me in a little bit late, but they usually turn out to be, pretty decent trades. And then I just use technical levels, support and resistance levels to manage and look for, exit points. But I'm not using volume on this at all. So, all right. So I'll leave it there, guys. We'll talk about this, about the Forex stuff more another time, but it's pretty interesting little indicator. I think it works really well. And it also allows me, since I spend so much time analyzing futures and volume profile, I can go through all these Forex pairs, look through every one of them in like 5 minutes. And if I don't see anything going on, I just skip right over it. I don't care what the price is doing. I'm not going to be pulled in by some random price action. I want the indicator. This is one point where I will look at the indicator first and then price second. Okay. And if I saw this, I'd be like, all right, yeah, this is a good trade. Price made a low, came up, put in a lower high, and then we get a signal. There's good chance this is going to go higher. Right. So I can just click through all these pairs, look at the indicator really fast, say, okay, is this a good point to enter? Do we have a signal? And then I'll look at the chart and say, does it make sense based on the price action on the chart? And then I'll make a decision whether to enter or not. All right. All right, guys, I'm going to leave it there. We're on 50 minutes. I can't believe I've been talking that long. Smash the like button, subscribe to the channel, questions or comments, anything else you want me to cover in more detail on either one of these, let me know in the comments, and I'll talk to you soon.